Palantir stock is up over 150% so far this year, and a lot of people are asking me if it's still worth buying. My answer is actually no. Even though I'm bullish on the company, Palantir stock is at an all-time high. So instead of buying the shares, I'll show you what you should be doing to make way more money safer on Palantir stock. Palantir stock has skyrocketed 150% this year, but the real question is, what is going to happen next? That's always what I'm trying to predict as best as I can, because with Palantir, this is an ever-changing stock and it's quickly changing in value, it's changing in momentum, and there's a lot of money to be made by following this company. I respect your time, so here's the answer, and if you want to stick around for the explanation, you're welcome to. The answer is dollar cost averaging high quality companies like Palantir makes sense because I believe Palantir stock will be $80 to $100 by the end of 2025 or into 2026. Number two, I think selling puts at a 40 delta, specifically a bit higher of a delta long term on Palantir using different expiration dates. One of them is going to be January, another one is going to be March, I'm going to show you, also makes a lot of sense. And I'm actually going to increase the delta from my typical delta of 30 and 20 because a higher delta actually brings in more premium. And I'm willing to take on more risk with Palantir because the risk of getting assigned isn't so scary if you want to own the stock. So there's your answer. So that's your answer. If you're in a rush, there you go. You can click off. But if you want the full explanation, let's jump into it. I'm going to give you several trades and I'm going to discuss the reasons why I am still bullish on Palantir, but I'm not really buying the stock itself. I'm trying to acquire the stock with different option strategies. The main one being selling puts and also dollar cost averaging into the company on a consistent basis. I believe the stock will be $80 to $100 by the end of 2025 or in 2026 based on the research that I've done. To understand Palantir's value at above $40 per share and why I would dollar cost average and sell puts long term, I want to highlight the most important thing. The most important thing is revenue growth. Guys, the stock isn't based on some fairy tale dream. It's based on cash, revenue, how much money are they generating? Initial growth and inconsistencies in 2021 through 2023 caused Palantir issues. Look, I think it's very clear though. With Palantir, there was inconsistencies between 2021 and 2023. Palantir's revenue did increase, but in a somewhat uneven manner. Okay, it was increasing, there was inconsistency. The company faced challenges in maintaining a consistent growth pattern, primarily due to its heavy reliance on government contracts. So something that really helped them, government contracts, also kind of gave them uneasy revenue. And slower adoption of its software in the private sector also affected Palantir. This inconsistency led to investors to have concerns about whether Palantir could sustain its growth momentum and break into the commercial sector and the commercial market, because that was also a really big opportunity. Investors knew that and Palantir knew that. So the turning point actually happened in 2023 when Palantir launched artificial intelligence platforms, or AIP. Okay, that was a major shift. A major shift occurred in early 2023 once they actually launched that, when Palantir had its fourth software suite, the Palantir Artificial Intelligence Platform. The platform was a game changer, absolute game changer, designed to address the growing demand for AI-driven solutions across industries. With the rise of artificial intelligence, which is a very big topic, and machine learning, I actually studied a little bit of this back in college. I have a data analytics degree, but I never got good enough at it to do artificial intelligence work, but I knew the importance of it. And the introduction of AIP opened up a new opportunity for Palantir, particularly in the commercial sector. The impact of AIP was quickly reflected in Palantir's financials as the slope of the revenue line ended up being steeper, indicating accelerated growth. As the slope of the revenue line ended up just absolutely taking off and accelerating growth at that point. This marked the start of a new phase for Palantir, where it appealed to private enterprises and grew substantially from that because there was a lot of revenue made, a lot. And it led to a more diversified revenue base. In short, the company was no longer just a provider of solutions for the government, but was now becoming a key player in the commercial AI space. And now let's discuss diversification into the commercial sector, because this is so important to understand. If you're going to be selling puts, dollar cost averaging into Palantir, that is a long-term play. If you want to be in a company long-term, you need the emotional strength to hold it. And what helps emotional strength? Knowledge. Okay. So historically, Palantir derived a significant portion of its revenue from US military contracts and related government agencies. However, with the advent of AIP, the company began attracting private sector customers in industries like healthcare, finance, and energy. To promote AIP, Palantir organized immersive demo seminars where businesses and business leaders could actually come and see the software in action and identify use cases that would benefit their companies. This strategic move, which was absolutely genius by Palantir, was highly successful, helping Palantir gain new commercial customers and reduce its dependency on government contracts. Very good for their business. As a result, the company's revenue growth became more balanced between public and private sector contributions. And again, as I said, more revenue and more diversified. That's exactly what investors saw. As you can see, the company went from $7 or $8. I was covering the stock back then, by the way. I do want to point out, I was covering this stock when it was cheap. I was covering this stock back in IPO at 27. And essentially, I've had Palantir for a long time. But yeah, it grew. It grew to over $40 per share. And now we're in a very interesting point because everyone knows it's a good stock now. The cat is out the bag, right? Everyone knows. Everyone's in it. So now is a very interesting time because every little discount that you get into the stock makes a big deal on a compounded annual return basis. Like if you hold the stock for 3 years and you bought it at 38 or 36 by selling a put option to get in, it's an advantage. I mean, it adds up because over a long period of time, it ends up compounding, and every $1,000, $2,000, $5,000 that you have invested ends up growing over the long term. So look, I think AIP as a growth catalyst is the most fantastic opportunity about Palantir. I know the government contracts are fantastic, but commercial in the private sector, very, very good. AIP has allowed Palantir to capitalize on the booming demand for AI-driven solutions, particularly in sectors seeking to enhance operational efficiency, automated processes, and gain deeper insights from data, which, again, I have a data degree. I know how important data is. I love data. My professor of statistics, he had a cup on his desk. It said, "In God we trust, all others must bring data." And I love seeing that every day. It actually was my favorite class. The platform's ability to scale and be customized for a variety of applications has broadened Palantir's appeal. So basically, they've been a leader in AI and they're leading their business, and it's accelerating in growth after the release of AIP. This has been the most obvious thing that has driven the stock. Keep in mind, it's not just the business, but also the investors moving the stock, okay? It's not just the business that made the stock $42, it's the investors. Beyond the investors, we have index funds, institutional investors like mutual funds and pension funds. They prefer to invest in companies that are part of major indices. This is because being included in the S&P 500 is actually the best thing possible that can happen to a company, and it's viewed as a company's stability. It makes it more relevant, and it makes the growth potential very clear because now everyone invests in it. Institutional investors, pension funds, etc. Once a company is part of the index, it gains greater credibility and visibility. This makes the company more attractive to large institutional investors who might have avoided it before because they have concerns. Pension funds, index funds, etc. By definition, an index fund has to have everything that's in the index. And if it's not in the index, then it's just by definition not in the index, right? But beyond that, I mean, just stocks that are not in S&P 500, a lot of investors will say, hey, I don't really trust the company. Even if it's a good company, I don't trust it. It's not well known enough, okay? So these fund managers, they have a boatload of money, okay? When they put the money to work, it moves the stock because there's a lot of people putting in, what's the market cap here the market cap of Palantir is $93.83 billion, about $95 billion, okay? 50 billion of that can easily be pension funds and index funds, etc., right? So it's easy. It's easy for a company to go up because demand, it's all about supply and demand. It's literally all about supply and demand. Now the demand is very high for Palantir because it's now included in the S&P 500. So by the way, I worked at small fund. I had an internship. I've had numerous jobs. I had numerous internships. I had numerous jobs. I was a consultant. I've done a lot of things. And when I was working at a small fund, mind you, it was $7 billion. That's considered fairly small. Imagine, big pension funds, they have 100 billion, hundreds billion, right? They're going to be able to move the stock, even if they put in a small portion of their money. So the influx of institutional investors also increases the liquidity of Palantir stock, which is a good thing for us, but it also increases the stock's price. So the higher it gets, the more expensive it becomes, and many people mistaken price with value, okay? many people make this mistake. So when a stock goes up, more investors become interested in that stock, which is the reverse of what it actually should be, okay? So when a stock goes up, a lot of investors are excited. Wow, it's going up. I want to be part of that. Great, but it's becoming well known, and the more well known and the more expensive it is, the less of a value it is. On the flip side, when I was talking about Palantir, before you were subscribed to the channel, maybe you were okay. Maybe you were subscribed. I love you if you were subscribed, but a lot of people, I was telling Palantir is a good investment. People thought I was crazy. You're getting paid by them. Guys, I don't get paid by anyone. I don't even take sponsors on the channel. Only thing I really want to do is educate on making consistent income trading options. I have a Discord, I have one-on-one coaching. Yes, I make money those two ways. I think this is such an easy opportunity to make money. Honestly, I think it's easy, and people weren't listening to me for a long time, and I want you to finally listen, because you're gonna regret not being in Palantir. And again, I don't get paid. It doesn't really matter to me. I'm just trying to make you some money, okay? And I want you to be smart about it. You also can't over leverage into Palantir, because it doesn't matter how bullish I am, how bullish you are. You also can't have more than 10% of your eggs in one basket, so to speak, right? The common term that they use. You need to have diversity. So although I am recommending that you should be selling put options to get in, let me show you an example right now. Let me go to Palantir options. So actually, let me show you my positions. My positions on Palantir, I need to scroll down here. I have 31 puts, 36 puts, which the 36 put I recently opened up. Oh, I made a little bit of a mistake on Palantir because I sold the covered call. I have it in my other portfolio, so I was trying to hedge this portfolio, but listen, hedging doesn't always work. Here's an example of me going bad with hedging. I mean, I'm still up a lot of money. I'm down 27K on the covered call. I'm not really down, I'm just gonna lose my shares. So it's showing I'm down 27K. So I'm just being transparent. You see my wins and my losses. I don't always, not only winning, but yeah, I'm winning because 102K I'm up total on this position. So I'm up 102K, I'm down 27. I have a lot of Palantir in my other portfolio. I have another over 5,000 shares. So look, this company, I have almost $500,000 in Palantir. It makes up a significant portion of my wealth. But again, it doesn't make 20% of my wealth. It does not. It does not. So I would recommend that you still stay aware that even the best company should not take up too much as a percentage of your net worth. Ideally, it's actually net worth. So a lot of students that come to me, they start with portfolios around 25K, 50K, 100K. They have more wealth. They own a house, they have income, they have other savings, they have Roth IRA, 401ks, etc. But they start their portfolio with 50K and they ask me, is it okay for me to have 25K at Palantir? That's 50% of my portfolio. It is okay if you have a whole bunch of wealth on the sidelines and you're just learning how to trade options, you're scaling up and you plan to add more money to your portfolio, then yes, 25K on 50K is okay if you have another 200K on the sidelines, right? But it's not okay if you put your entire wealth in and your entire net worth is 50K. No, it's probably not okay, because that's a little bit too much of a percentage of your overall wealth, okay? So when I do my one-on-one coaching, I always want to understand someone from a deep level. Like, yeah, I get it. We all have to start somewhere, but what does that overall wealth picture look like? How do we build that financial plan? How do we build your risk profile? How do we build income? How do we look at taxes? Although I'm not a tax advisor, I'm not licensed, I'm still giving tax tips and tax opinions that I have gone through because I pay a very significant portion of taxes, unfortunately. Even though I don't live in America, I'm still a US citizen. So I pay a bunch of taxes. So anyways, I think looking at selling puts on Palantir, 36, 37, 38, all of these strike prices I would do for November 15 for December 20th, okay? So the influx of all the institutional investors, guys, it's gonna probably keep the stock above 40. Now, given some of my luck, I've done fantastically well, but I'm not always the luckiest. So given my luck, I say it's gonna be above 40, it might fall below 40, but hey, it's not a problem because I'm not a short-term guy. I'm not gonna look and get afraid. If it falls to 39 tomorrow, it's fine, okay? I'm happy anywhere 36, 37, 38 for selling puts. And anything under 40, I'd just straight up be buying shares. I'd be dollar cost averaging. If you get a paycheck or you have a business or whatever, you get commission, you take that commission check or the salary that you have every 2 weeks, take a portion of it, say goodbye and put it into the market. Have that money today, invest in the market, take care of you in 5, 10 years from now. You'll thank yourself later, okay? It could be Palantir, it can be NVIDIA, it can be any high quality company. I cover many on this channel. I have a stock watch list in my Discord where I'm following the same 20, 30 stocks. That's because I want to become an expert at what I cover. That's why I cover the same stocks for years. Years Nvidia, years Palantir, lots of stocks that I just stick to, and I just keep trading them over and over again because I understand them on a deeper level. When you follow the same stock for a long time, you understand it. You don't have to be an expert at fundamental or technical analysis. If you follow a stock for a long time, you start to get a feel for it. So that's very important in the stock market, guys. I don't care what anyone says. I don't care what investment banker from whatever bank tells you they think. I don't care what some person that claims that they know technical analysis, fundamental. Doesn't matter. At the end of the day, you also need intuition in the market. You need experience. I've been doing it for 10 years. So sometimes, not all my decisions are based on the technicals or the fundamentals. Sometimes they're based on intuition on what the CEO is doing, what the leadership of the company is doing, where the company is innovating, and the trend of where the company is headed, given the technological advances that they're making. So look, as more institutions buy into Palantir, this increases demand. This leads to upward pressure on the stock, and the stock price goes up. It's basic supply and demand, guys. Institutions often take long-term positions, which can support a steady rise in the stock value over time, which is actually what I really like to see if I go to years to date. I believe this is a trend of institutions because as it entered S&P 500, it's just been a very clear upward trend. Institutions are typically looking at companies' long-term fundamentals, so that's good. Now that Palantir is added to S&P 500 and it didn't crash, that's a very strong statement because a lot of institutions are not looking at it and they're buying it. They're not selling it. So that's also a very strong case. Palantir built its reputation and initial success through its deep partnerships with the US government, especially its flagship product, Palantir Gotham, which was designed for counterintelligence. There's designed for something a little bit similar, but I can't mention on YouTube. You know, the counterintelligence basically and defensive intelligence work, all right? These contracts provided consistent revenue streams, giving the company a solid financial foundation while allowing it to develop and refine its cutting-edge technology. Government contracts, particularly long-term ones, offer Palantir stability in volatile markets because these contracts are $100 million. And guess what? They're not going to go anywhere. I mean, look, once a company, and I've said this, I know I said it, but I want to instill the actual thinking of how I'm picking this company. When Palantir comes into a business and implements an implementation that costs $100 million, company's not going anywhere. The switch cost is too high, all right? That's actually how software companies get you, is software companies are really good. Software companies is actually the best way to get rich, I think, and if you're an individual, building a software is like the best thing. But once the software company comes in, if they have a sticky software which you can't get away from, Palantir just gets $100 million. But even a small software company, even if they come in and they implement something that's like $500 a month recurring, and the company can't really get away because there's sticky costs and there's implementation cost and there's truly an added value. These SaaS companies build recurring models of $500 or $1,000. You know, there's softwares that are $5,000 a month, etc. Salesforce is a good example of a high ticket software. I had a friend that worked at Salesforce, and once there's recurring income that's consistent and the company can't really get away, that's a model for success. It's a really good model for success, and that's why SaaS companies go for 40x multiples. So if you're looking to sell a business, SaaS is the best business. So that's why Palantir is kind of like a SaaS, right? It is a SaaS. They do like a bunch of consulting work as well, right? They have deep relationships, but I kind of view it as a software play as well. I mean, it is a software play, but they really have that very strong business model and that revenue growth model. So it's just the best of both worlds. However, the company does recognize early on that the over-reliance of the government has been good, but there's also limitations. So government contracts are typically slow moving, and while they're reliable, they can also be subject to budget cuts and political changes and, you know, extended procurement processes. There's a whole bunch of stuff on the government side. I've actually worked with the government a little bit. I worked at IBM, so that was one of my consulting jobs, and they put me on many different projects. So I've gotten to work at several government stuff, and oh boy, they move very slowly. So in order to achieve sustained growth, Palantir needs to diversify into commercial sector, not just the government sector. They're doing that, and that's where the launch of Palantir Foundry and AI integration came. I also think that it's going to be a stock that, honestly, I think Palantir is going to be $100 or more dollars per share in the next few years. So it's going to have NVIDIA-like return. I'm so bullish on the long-term prospects that selling $40 put options that expire into 2025, no issues, because getting assigned this stock is a good thing. So getting paid to get assigned is an absolute no-brainer. And because they're in healthcare and they're in financial services and energy and utilities and manufacturing, I mean, guys, I spent a lot of time researching this video. So if you appreciate that, subscribe. And I actually want to go over some research of where Palantir is within these spaces. Starting off with healthcare, Palantir has significantly expanded into healthcare sector where data integration, analytic capabilities offer transformative benefits. The company helps healthcare providers, pharmaceutical companies, and public health organizations leverage large data sets to improve outcomes and efficiency. Those outcomes and efficiencies are a lot of dollars, all right, a lot of dollars. The key use cases include vaccine distribution and tracking during, COVID-19 pandemic. Palantir was instrumental in vaccine distribution and tracking, right? Everything about tracking is data, providing real-time data to ensure that vaccines were delivered efficiently and in the right quantities and in various locations. Okay, I was doing some research on that. Now also just hospital operation. Palantir's platform is used by hospitals to streamline operations from managing patient data to optimizing resource allocation, ensuring better care at lower cost. Hospitals have a lot of cost. Healthcare in general has a lot of cost. In fact, my best friend who was going to be a doctor, he was telling me how in the last years of someone's life, it really costs like millions of dollars. It's really expensive. Okay, so also looking at the healthcare side, pharmaceutical research. Pharmaceutical companies use Palantir to accelerate drug discovery, so improve clinical trial outcomes and enhance overall operational efficiency by providing real-time analysis of patient data and trial results. Okay, now that's just the healthcare side, guys. Now let's talk about the financial sector. Palantir's Foundry platform enables companies to process, analyze, and visualize vast amounts of data to make better decisions. This is like kind of my dream. I love data myself. I love data, and it's something I studied. And the way that financial institutions use data, it's really beneficial. So like financial services companies are increasingly adopting Palantir's tools to manage risk, optimize investments, and streamline regulatory compliance, which is super boring, but super needed, right? Compliance is very important. So an example of how Palantir is applying this, or has it applied, is basically on the risk management side, okay? Banks and financial institutions use Palantir to monitor and mitigate risks such as credit risk or operational risk by analyzing, you guessed it, vast amounts of real-time data. This allows them to stay ahead of potential crises or inefficiencies, so it's mandatory for the business. They need it. All right. Also on the investment decision-making side, which is what we're doing here, what we're studying here, basically with options and investment decision-making, Palantir helps investment managers aggregate and analyze data from various sources, providing them with actionable insights for optimizing portfolios and finding new opportunities. That's right. Palantir is also in investments, in investing advice, in portfolio management, and hedge funds. Insane. Because data at a hedge fund is the most important. The most important. When you have a data advantage, it's game over. You can make a lot of money, and it's practically unlimited money, practically, right? When a hedge fund exploits an opportunity in the market, which if they find an inefficiency, they can put $1 billion to work, and at 1%, I mean, what is that, $10 million? I mean, not bad, it's pretty good. Pretty good, right? $10 million in a week or 2 weeks on an inefficiency is a lot of profits, right? So obviously that portfolio manager is going to get a good bonus, and the rest of the company eats and feeds on that. So yeah, big institutions and hedge funds will be using Palantir. Now, I mentioned compliance and regulatory compliance. The financial sector is highly regulated, which is probably a good thing, right? It's probably a good thing. It protects us as consumers. Although sometimes I get annoyed when I'm traveling, and I travel a lot and my credit card gets declined. I'm like, oh, again, I'm getting declined. Or I'm trying to buy something for I rented a car for $1,000 and the card gets declined. Oh, it's so frustrating. But compliance, regulatory, fraud detection, right? So Palantir helps companies manage compliance more efficiently by automating data collection, reporting process, and all of this data is how AI basically makes decisions. So like when I go ahead and swipe my credit card, I was in Moldova. Now I'm back in Warsaw, Poland. I was in Moldova, spending some time there. That's where my roots are from. And I rented a convertible Mercedes, right? It was like a month ago when it was a little bit warmer down there. I swiped the card and it didn't go through. I got an email from the bank. Well, do you think that's manual? No, that's AI, right? So they're looking at a bunch of transactions and their system has flagged me trying to pay a random vendor, because the guy's pretty random. Like the guy that I rented the Mercedes from he has a dealership, but he's not like an official company. He's like kind of like a small little local business, right? He has like, I don't know, 50 cars or something. So when I go and tap, it declined, right? And that is AI. That's where our future is. Everything is going to be automated, and AI is better than human detection, right? So that's basically what happened there. The algorithm rejected my purchase. So all right, now moving over into Palantir, into basically their energy, the energy side of the business, right? How they're helping energy companies in the utility sector, where its platform is used to optimize operations, reduce costs, and manage infrastructure more effectively, right? So with growing global emphasis on sustainability and the energy transition, Palantir's tools are becoming increasingly valuable for energy companies. And some key applications include operational efficiencies. Again, it's all about efficiency, guys. There's always cost and efficiencies that are very important, all right? So energy companies use Palantir to monitor production processes and optimize resource allocation, reducing waste and improving overall efficiency. Sustainable energy. With the transition to renewable energy sources, Palantir is helping companies manage their data to integrate solar, wind, battery, storage technologies effectively into existing grids. So also smart grids. Utility companies use Palantir to optimize their smart grid systems, which are designed to manage electricity more efficiently, which pretty obvious there. Some electricity efficiency savings can cost a lot of money. Now on the manufacturing sector, it's major focus for Palantir, especially with the rise of Industry 4.0 technologies that integrate automation, data exchange, and smart systems into production lines. So Palantir's platform is used to optimize operations, enhance productivity, quality, and manage complex supply chains. So key benefits are, again, the supply chain. So Palantir's Foundry analyzes production processes in real time, reducing downside, improving efficiency, and identifying cost savings, okay? Also, there's predictive maintenance. This is super interesting. By analyzing machine performance data, right, they have machine learning models that are predictive in saying, hey, this machine may fail or break soon. You must fix it. Or you must proactively take a look because this cog, or there may be an issue here. So they reduce the risk of a bad outcome by predicting it in the future. This is also very applicable to Amazon, how Amazon's AI models work as well. So look, when I was in college and I was studying AI, data learning, all this type of stuff, how does Amazon get shipping to your house in like very, very short amount of time? Amazon already knows in a certain area how likely or how many products of a, detergent will be ordered in a given day. They have data, they have a predictive algorithm that says, hey, on average, on Tuesdays, it's crazy, at this time, for some reason, more people are getting detergent, or more people are buying this chairs, or during this season, more people are buying a cough syrup, right? Or medicines. So they know within a particular day of the week and time when to have a product on their shelf. So before you even order it, Amazon already has in their algorithm like, hey, probably gonna get about 7 orders today in this zip code. We're gonna have that local warehouse already contain that product. So before the customer orders, it's already there because they already know what you're going to order ahead of time. Now, it's not that they read your mind, just again, data on a large amount of data, it's very predictable what will happen. So as companies move towards more data-driven logistical operations, Palantir's platform will help them optimize routes, manage fleets, and predict demand. I don't know, I was kind of like, my mind was kind of blown when I was like, wow, you can predict demand? It's insane. So also looking at things like fleet management, Palantir's Foundry platform allows logistics companies to track their fleets in real time, helping them optimize routes, reduce fuel costs, and improve delivery times, which is really important because don't we all want our Amazon packages as fast as possible? I wish I could have Amazon. I don't have Amazon out here, but if I had Amazon, oh boy, I would probably order a few fun things. It's fun to shop, but I have been in the US for a bit now, and when I come, I only come for a couple of weeks to see family. When it comes to route optimization, Palantir's software helps companies optimize delivery routes, reducing fuel consumption, and all of this is, again, why I think that the stock is a no-brainer to sell put options on. If you guys want to see how I'm running the wheel strategy on Palantir, I recently made a video that I think you should definitely check out right here.